put up essentially the MSCI All Cap World Index. So this is the index that represents the entirety of the global stock market. A large portion of it, as I'm going to show you later on, is the US stock market, but it gives us the good representation. So in the last 6 months, we've witnessed decent start, a sharp correction immediately, which we've gone through. 10% or greater is defined as a contraction.
In one day.
In one day, basically. In some specific cases, we've also seen some indices fall into bear market territory, which is a 20% correction. Then all to be recouped and sharply recover afterwards. So since that 16% correction on the MSCI World Index, after Taco, you already mentioned the figure on the World Index, 23% rally. The ride has been wild, but focusing on the rally itself, it's always important in my mind to dissect exactly what was going on, right? And so what's very interesting to note here is that when we look at the source of that recovery in second quarter rally that began with Trump backing out, it was not an earnings-based rally, but it was an expansion of multiples, okay? So roughly 2/3 of the return on the world index for the second quarter was driven by multiple expansion instead of earnings growth. And for those of you at home, in layman's terms, that essentially means the rally was not because companies were making more money. It was because investors were optimistic and they were willing to pay more for the same level of earnings.